Hi there, welcome to kneppyinvests. On June 14, a company called LGI released a positive trading update to the market. And that's significant for two reasons. First reason is June 14 is the greatest day of the year. And the second interesting reason is because LGI is a recent IPO. When I say recent, I'm talking about 9 months ago. And since I've already mentioned LGI in a few of my videos in the past, I thought now is a good time to do a video on this recent IPO. Whenever I am researching a company for the very first time, particularly if that company has recently IPO'd on the ASX, I naturally go straight to their prospectus. Now, LGI's prospectus was about 125 pages long. And the main reason I go to a company's prospectus is because it's a trove of information, not only about the company, but also the sector they're in. So I found a lot of information, not only on LGI, but also on the stuff they're doing, their technology they're doing, and also their competitors, that sort of thing. Now, the story of LGI starts at the landfill. And how many times have you recently thought about landfills? I don't think about landfills all that often, even though we all generate an abundant amount of rubbish. And the majority of that rubbish, unless you're very keen about separating everything into different sorts of things, but the majority of our rubbish goes to landfills. And landfills tend to get full. And I'm not even sure what councils do when landfills actually become full. I do know they close them off and they do all this environmental work on that sort of thing. But even though they do that thing, they become full, a majority of landfills, if not all landfills, generate biogas like methane. And to be honest with you, before I started researching LGI, I did not think anything about this sort of thing. So obviously the management of LGI, and I'll talk about the management of this company, had been thinking about this for a long time. So landfills generate biogas. So it's all about methane, which can become quite dangerous. So what do we do with that biogas? So there are a few things we can do. First thing is we just use biogas flares to get rid of that methane. Another thing we can do is generate power. And that's exactly what LGI does. They use biogas flares and also they generate power using that methane. Right now, LGI is concentrated in Queensland, particularly the southeast Queensland part of the state, which makes sense because this company was founded in Brisbane. They also have a scattering of sites through New South Wales. So there's definitely scope for this company to expand across the rest of the country over the next 5 to 10 years. There's also the possibility of possibly expanding overseas. Now, when you're talking about landfills, it's very important to know that there's a wide range of different size landfills out there. The majority of landfills in Australia produce or receive less than 20,000 tonnes of waste per year. In fact, out of the 1,100 landfills, about 950 of those are small, receive less than 20,000 tonnes per year. But there's also quite a few big landfills out there. About 50 landfills in Australia receive over 100,000 tonnes of waste per year. Now, the reason to distinguish between small landfills and large landfills is important because at those large landfills, those are the ones that generate enough biogas that you can generate power. But you also can take advantage of those smaller landfills by carbon abatement, biogas flares. LGI generates revenue through 3 different sources or ways. That is power generation, carbon abatement, and also site infrastructure and management. Now, revenue is derived from the sale of electricity, LGCs, which is large-scale generation certificates, and ACCUs, which is carbon credit units. Now, if you break down the revenue in financial year 22, 45% of LGI's revenue was through ACCUs, 37% electricity, 12% LGCs, and 6% biogas infrastructure and management. And this is a nice little image that I did get straight from the source, straight from LGI, conversion of biogas into revenue. And this is very important because the whole reason we invest in companies is because they can generate revenue, grow their revenue to produce profit. So LGI installs, operates, and maintains biogas extraction infrastructure on landfills at competitive rates. ACCUs, which is carbon credit units, created for carbon abatement, reducing methane emissions from landfill. LGCs earned for displacing fossil-derived power with renewable energy, and electricity sales and FCAS services to NEM. Now, there's quite a few acronyms within this particular slide that go straight over my head because my knowledge base on this particular topic is fairly low. Another thing I like to see for every company is a breakdown of the revenue per sector or division, and also the margins within these particular sectors or divisions. And LGI actually did this in one of their presentations. I'm not sure if I got this from the half-year presentation or maybe from their prospectus, but they've broken down their revenue into those three different revenue streams: sale electricity, the ACCUs, and site infrastructure management and others. $24.4 million of revenue is forecast for the sale of electricity, $5.3 million of revenue for the ACCUs, and $1.6 million in site infrastructure management and other. And by far, the greatest amount of EBITDA produced by this company is in the sale of electricity. In fact, $10.2 million EBITDA out of $12.4 million. So that is very important. The other thing to take note is the sale of electricity is only done in Queensland and ACT, not New South Wales. Something else LGI did in one of their presentations is include a return on invested capital figure. And I really appreciate this because this is something I look at for every single company. And return on invested capital actually has been growing over the past 3 years from about 15% to about 32%. Now, a few facts in regards to LGI. This company hasn't been around for too long. Founded in 2009. And another thing I really like about this company is just, it seems like the company's management is really passionate about the sort of work that LGI is doing. And to be honest with you, I think it's very important for management of companies like this to have a lot of passion about what they're doing, to believe what they're doing is beneficial for the world. Now, LGI listed on the ASX about 9 months ago, 8 or 9 months ago, on the 4th of October, 2022. The managing director, not the CEO, but the managing director and founder of this company is Adam Bloomer. And he also owns 20% of the company, which means there is pretty good skin in the game here. A few other members of the board of directors also own a fair bit of the company as well. So a lot of skin in the game when you look at insiders of LGI. The current market cap of the company, about $220 million. That's a share price of $2.53. Share price can be a little bit volatile from day to day, just because there is a little bit of an issue with liquidity, not a lot, but a little bit. There will be some people complaining because shares aren't traded every single second. And one of the reasons there is a liquidity issue is because a lot of skin in the game, a lot of insider ownership, but also only 88 million shares on issue. And the ticker code is no surprise. It could not be anything else other than LGI, unless, of course, there was another company on the ASX with a ticker code LGI, and then LGI would have had to nominate another ticker code. That would have been awful. But we have seen that happen before. The current CEO of LGI is Dr. Jessica North. She's also executive director. She's been the CEO of LGI since 2017, and she's been with LGI since at least 2012. So near the beginning, she's been with this company. And her experience, not only experience, but her passion for the work she's doing is quite impressive. In fact, even though she is a New Zealander, she was actually named Young Scientist of the Year in New Zealand in 2005 for her research into contamination of water systems by landfill leaches. So again, she has experience with landfills. So I went through Dr. Jessica North's profile, and I did come away quite impressed, not only by her background, but just by a passion in this field. Now let's have a look at the company's financial year 22 numbers. And this is before the company listed on the ASX, and that will become irrelevant in a second. But nice growth. Revenue from 14 million to 26 million. Operating cash flow positive, $7.4 million in financial year 22. But the company does spend a fair bit of money on capital expenditure, which is important because even though they were operating cash flow positive, they were actually free cash flow negative, and they're also profitable. $4.8 million of profit in financial year 22. But because they were burning through a little bit of cash, free cash flow negative, they did have a bit of debt, $22 million of debt. And one of the reasons they listed on the ASX is because they wanted to decrease that debt. And that's exactly what they did with the proceeds from their IPO. They decreased their debt. Now, because the company has been on the ASX for about 9 months, means we have 1 half year of results for the company. So we can look at the half year results ending 31st of December 2022, just after they IPO'd on the ASX. And everything's moving in the right direction. Revenue up 61%, gross profit up 42%, EBITDA 47%, EBIT 72%, profit after tax 95%. The only thing that wasn't up was underlying operating cash flow, fell 4%. But you also notice net debt to EBITDA is now negative, not 4.2, because the company has no net debt, and return on invested capital up to 32%. I've already mentioned this company does spend a little bit of money on capital expenditure, which makes sense because they have to build the biogas flares, the power generation units, all that sort of thing. And in the past 2 half years, they have spent about $4.7 to $5 million on capital expenditure. Now, they did mention here that LGI continues to invest 30% of revenue in capital expenditure. I'm not sure if that is one of their rules they have in place. They're only going to spend 30% of revenue on or in capital expenditure. But it's very important to keep an eye on how much money this company spends on capital expenditure and whether it starts to increase above that 30% of revenue. Another thing I'm going to keep a close eye on LGI is just their free cash flow. This company is generating operating cash flow. It is positive, but because this company is spending money on capital expenditure, they have tended to be free cash flow positive or negative. And that's one of the reasons they IPO'd on the ASX, just to bring a little bit more cash into the business and to decrease that debt. So this is their cash flow from their half year. So operating cash flow, $3.8 million for the half year. And you can see pro forma cash used in investing activities. That includes capital expenditure. And that was $4.9 million for the year, which means this company was free cash flow negative by about $1 million. Another thing I'm going to keep a close eye on LGI is just the amount of debt this company has moving forward and whether they fund their capital expenditure through debt. But one of the reasons why they did IPO is to decrease their debt. And this is found in the half-year presentation. And this company is no longer or has no longer positive net debt. It's actually negative because they have more cash than debt. Apart from being a recent IPO on the ASX, one of the main reasons, motivating forces for me doing today's video was because of this particular announcement the company did release to the market on the 14th of June, the greatest day of the year. And this was just an update to their financial year 23 guidance. And this was a profit upgrade, but they did upgrade EBITDA, which is not technically profit, and also revenue. So they now believe EBITDA will be between 13.9 and 14.5 million, which is an increase of about 6% to 11% on early guidance of 13.1 million. And revenue is expected now to be between 32.2 million and 32.8 million, which is a little bit higher than the early guidance, which was 31.3 million. They also gave some reasons behind this profit upgrade: higher gas flows, higher volume on ACCUs, carbon credit units, higher profit margin on construction work, exactly what I want to see, ACCU spot pricing higher than guidance, LGC spot pricing higher than guidance. Now, those two last reasons are probably the only concerns I have about this company moving forward, is just the spot pricing and how that could be negatively affecting the profit and possibly revenue of this company in the future, because they have no control over those two spot prices. That's all I have for this first look at LGI, an interesting company on the ASX. If you have any thoughts about this company, any questions, I'd like to hear about them. So leave them in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.